Apparently it's like 1999. That's how many back-to-back new record highs we've seen for European equity markets. Too far, too fast, a little bit too much euphoria, or does all of that make sense?
I think it makes a lot of sense, and I like your comparison with 1999 because obviously we all remember it as the tech bubble, but what was also going on, you had a tremendous acceleration in global growth, and that's what's happening at the moment. Over the past year, the euro area PMI, which is one of the best measures that we have for the euro area macro cycle, is up by 40 points. We really haven't seen it since the late 1990s, and equities reliably rally when growth momentum accelerates. So I do think the story is just playing out as you should expect it to.
Does that mean it's going to end like 1999? And if so, what's your kind of timing for when this disappointment will come?
Yeah, that's a nice continuation of the story. The story in 2000 was a sharp deceleration in growth momentum. I think the underlying mechanism, the underlying logic is the same, which is the market is likely going to peak when the growth cycle peaks, and so that should be even more than inflation on top of investors' agenda. The question, this was a fantastic party. We've accelerated for a year. Everything that is cyclical has benefited. And now the question is, when is it going to peak? We think the most likely peak in the global macro cycle and the euro area macro cycle will be in the third quarter. But then the discontinuity and the disanalogy with 1999 is we think there will be a soft deceleration growth because there really isn't any catalyst that forces you to decelerate forcefully. So yes, we think there will be a peak in the market in Q3, but then followed by a mild pullback as you effectively go from strong acceleration to mild deceleration.
Why mild deceleration and not some more serious pullback, Sebastian? Is that because of the different role that technology stocks played this time versus 1999? I mean, during the pandemic, technology stocks clearly very strong, but since we got the vaccines, the recovery maybe has been broader.
Yeah, now I'm really talking about the macro cycle. So we should focus on what has led us to accelerate and what potentially could lead to a sharp deceleration. So let's think about the last two peaks in the macro cycle. Obviously, in early 2020, you had a powerfully negative catalyst coming in, which was the pandemic. You had to close the economy, and that's really what generates a powerful deceleration. As far as we can see, there's no such factor around. Then think about 2018, the previous peak in the macro cycle when euro area PMIs were at similar levels as they are now, and you had a very unfavorable inventory cycle. So all the companies were drawing down their inventories. That leads to a sharp basically drop in production, and again the macro cycle peaked and rolled over. What we have now is still support for the euro area macro cycle from continued reopening. We have tremendous amounts of stimulus in the US, and very likely you will get an infrastructure bill at the end of the year further supporting growth. So all you're doing is you're running out of that powerful reopening fuel slowly, as opposed to some negative catalyst coming in from the outside.